As of lately, I've been opening up a lot more in regards to time and exactly how I trade, breaking down the real time cycles that matter within the market and not any random numbers that I've made up. And this is a repeatable process because it's not just me making money from these markets, also the people that are understanding how time-based ranges work and my approach are as well. And this video is going to be very special because I'm going to dive into the importance of one candle, how my time-based ranges blend into this to giving you clarity before you even take a trade. And by the end of this video, I'm going to guarantee you this one thing. You're going to know exactly when to sit in front of the charts, and that's the biggest mystery most traders face. So with all of that being said, let's get into this video.
Focusing on one single candle and how this blends together with my time and price theory. So if you're new to my channel, I focus mainly on time because time is the only repeatable variable within these markets. If you think about the markets very logically, every single day, trillions of dollars are getting driven into these markets every day, right? So the market has to follow a system. This system has to pair orders for it to work, so the market to run in the first place. Every buyer needs to have a seller, and every large position needs to be facilitated at a banking level. So this is where the concept of market making takes place. So market makers are not evil people, they are just people that are there to facilitate orders. So if someone wanted to put in an order for 200 million, for example, a market maker will facilitate this order. So what I mean by facilitating is someone wanted to sell, the market maker will buy for a 200 million bid. And that's basically what keeps these markets efficient and the orders are getting facilitated. So before the markets were electronic, obviously it was the open outcry period. And even in that period, the market had to follow a system. And if you think about right now, if you wanted to send money to one of your friends' bank account, it has to follow a system for that money to arrive into the right bank account. The exact same process is done in the financial market. You think one of the most complex markets, the one that has the most money driven into them, they don't follow a system? If you don't think that, then you are completely wrong because the markets follow a system. Everything is algorithmic to a certain point, and all we need to figure out is a mechanical system at a retail level, like I'm teaching you, that we can repeat and make money with over 50% of the time. So this is why we're going to get into this one candle theory, using my time and price theory along with this, giving you a complete process into the market. So let's get into it. The candle type we are going to focus on is going to be an accumulation candle. So we need to identify where orders are resting within the market. So using this one candle, we are going to focus on the London and the New York session. For the London session, we are going to focus on the 2 a.m. 1 hour candle. So this is an hourly candle that we're going to focus on. And for the New York session, we're going to focus on the 8 a.m. 1 hour candle. So this is what I have right here. So this hourly candle is going to have liquidity above it and liquidity below it. So this is your 1 hourly candle. And within this, there's going to be a time-based range that we are going to get into. But the logic behind this is all you're waiting for is the market to take out one side of this liquidity pool. But its liquidity rests above this candle and below this. So this is a range. The market likes ranges. I like to trade ranges as well. So here, I'm looking for the market to trade lower. Take out the low of this range. As this is an accumulation candle, the next candle is going to be a manipulation candle. So this is a power 3 fractal. So if you know about ICT, you know about its power 3. This is the logic behind it. So the accumulation candle, this is on the hourly. We're going to move on to the lower time frame. So this is the lower time frame. This is where the market trades below this low. Then we shift delivery. So once we shift delivery, closing above this, we can trust the buying setups to target this high. So this was the manipulation below the accumulation candle. This could be either at 2 a.m. or 8 a.m. Once we trade below this low, we can look to target the opposing end of the range. Now we've gone over the basics of the 1 hour candle, 2 a.m. and 8 a.m. We know this is what's going to hold liquidity above and below the marketplace. Lower time frame fractal, we're looking for the run lower to target the high or the run higher to target the low. But how do you actually trust this? We're taking a buying or a selling setup within the market. So let's move on to the exact time-based ranges you're going to focus on. Before I dive in and start teaching you more regarding these time-based ranges, I want you to put this into perspective of why this actually works and what's actually going on within the market. So think very level-headed right now. If you work a job, right, you have to turn up at 9 a.m. What's guaranteed at 9 a.m.? The same people, your co-workers, are going to turn up at that exact time. What is guaranteed within these markets? This market has to print a candle every single minute of the day. It has to print a candle every single hour of the day, every single 4 hour, everything like that. That's what's guaranteed to the trader. What isn't guaranteed to the trader is a random pattern within the market, a bat pattern, how much volume is going to be at a certain time. None of this is guaranteed. Only thing is guaranteed is a time cycle. So the first one we're going to speak about is my New York range, 812 to 912. Next one is 112 to 212. This isn't anything I've made up. You can not take my word for this. Actually sit in front of the chart, be very level-headed, and be like, this is what he's taught. Let me backtest this. So this is exactly how you're going to approach it. So the 8 a.m. candle and the 2 a.m. candle. Within this, there's going to be a time-based range. So this is where we have the candle, and then we have the time-based range. So above this candle, we have liquidity, and below this candle, we have liquidity. So this is the time-based range, this smaller box, and you could see this is where we trade below the time-based range. We have liquidity resting below this low, and we have liquidity resting above this high. All we are waiting for and looking for is this market to trade lower or higher. If it trades at higher, takes out the high first, amazing. We can target the low. If it takes out the low first, we can target the high. Exact same process. This is completely mechanical. Trust the model, trust the system. You're going to have losses, which is completely fine. Your winners are going to outweigh your losses long term, and it is going to be profitable. So here, once we take out this low, what are you looking for? Market to shift delivery. So the 3 down close candles that were here, we're using 3 because there's often going to be a fair value gap within this range. That fair value gap should support the market lower. If it fails, we know this is going to be a bullish market and it's going to continue trading to the upside. And that's exactly where you're looking to buy. This portion of the move, that's all you need. That's all you need to be profitable. All you need is 50 points. If you trade the New York session, then you're obviously going to focus on 812 to 912, and it's going to be the 8 a.m. hourly candle. So that's going to be your one candle, which is going to have liquidity above and below the marketplace. If you trade the London session, then you're going to focus on the 2 a.m. candle. But these are my very specific time windows. So have them mapped out every single time you sit on the chart. So now I'm going to move on to TradingView, and I'm going to break this down into a lot more details so you can understand exactly what I'm talking about. And let's break down exactly what took place. So you can see right now we have this low and we have this high. So this is the high of the 8 a.m. candle. This is the low of the 8 a.m. candle. What else can we see? We can see we have liquidity above the marketplace, and we also have liquidity below the marketplace. So to entertain this market, what are we looking for? We're looking for one side of the range to be taken. So if we drop onto the lower time frame, as we've identified the high and the low of the 8 a.m. candle, we are going to identify our time-based range. So obviously we are going to wait until 9:12 because it starts from 8:12 and finishes at 9:12. So on the 5-minute time frame, you can see we have a low. So this red line, this is the low of the 8 a.m. candle. This is the high of the 8 a.m. candle. Now we are waiting for this range to start printing at 9:12, and all we're looking for is a run at this low to target the high, or if it runs the high, to target the low. But we are using the context of that one candle from the hourly time frame, which is 8 a.m. Okay, amazing. As you can see, we take out the low of the range, so we take out the low of the 8 a.m. candle, and we also take out the opposing end of the liquidity pool. So what's resting? The buy side liquidity above this range high from the 8 a.m. candle, and the liquidity resting above those highs that we identified on the hourly time frame. So if I zoom into this fractal, what are we looking for? We're looking for the market to shift delivery. 2 down close candles, this is where we shift delivery. This is where we can trust a buy and settle. For me, I'm not buying this market as it's trading higher. So I have a rule: if the market's pushing to the upside and I'm bullish, I'm never buying into up close candles. I'll only buy when the market drops lower. So I only buy into down close candles. So this is where I will be looking for a buying opportunity. If the market can trade lower, trade into this order block around 50%, and then I'm looking to target those highs. So this is for around a 1 to 3 trading setup, actually 1 to 2. if I had to refine this stop loss a lot more. And as you can see right here, market shift delivery, we drop lower, trade into the OB, holds up 50%, price pushes to the upside, finally closes above the down close candle again, and then trades into the opposing end of the range. So we built a bullish bias basically from that hourly time frame where we were looking for the market to trade lower below the 8 a.m. candle to target the high, or if it takes out the high, then the low. And then the next thing is we're looking at the time-based range. So from 8:12 to 9:12, market trades below the low, shift delivery closing above this down close candle. This is enough for me to look for the buying setup, but I'm not buying if the market's up here. I'm buying if the market retraces into a logical area, so 50% of this OB, that's worth a buying setup. Because if you're buying up here, you always run the risk of the market trading lower, taking the stop, and then trading into the direction you want it. So always wait for the market to retrace into a logical area where you can buy and sell from. So let's go over one more example. Okay, one more example that we are going to go over is from the 23rd of September. So this is the 2 a.m. candle. We have liquidity, which is resting below this low, liquidity resting above this high, and we also have a fair value gap down here. So this is just using the context of the market and where it is trading. So obviously we want to focus on this hourly candle, the high and the low, but we can move on to the lower time frame. This is where we're going to wait for our time-based range. And ideally, if we're bearish, the market takes out the high and then the high of our time-based range to target the low, or we take out the low to target the high. That's basically the thought process and what I can trade or what you can trade with this approach. Okay, moving on to the lower time frame, you can see we have the high of the 8 a.m. candle and the low of the 8 a.m. candle. And we also have the low of the range, which is right here. This is what we're looking for the market to trade into, and we're looking for the market to trade into the high. So whatever side gets taken first, we're looking for the opposing end to get targeted. Okay, perfect. You can see we take out the low of the range, so the time-based range. We take out the low of the 8 a.m. candle. What do we have left? We have the liquidity above 8 a.m. and we have the liquidity above the time-based range. So what happens here? We shift delivery once we close above this down close candle. So once we shift delivery, this is where we can trust a buying setup. So this is where we can buy, looking for the high of the range, and your stop loss can just go below this low. So we're looking for the market to drop down lower. We're not buying up here. We're buying when the market drops lower. We're buying into down close candles. This has to be a rule of yours because that's where you're going to have your best entries within the market. You might have to wait a bit. You might miss a few trades, but over time, it is going to be the right approach, which is going to find you the right trades within the market. And there we go. As you can see, price trades into the buy side liquidity pool and tags us in, trades into the gap, and then pushes to the upside. So with all that being said, I hope you did find this video insightful, me breaking down the approach to one candle and blending this together with my time-based ranges. When you have three confluences that come together, that's ideally where you're going to find the best trading setup. Like we trade below 8 a.m.'s low, we trade below the time-based range low, we shift delivery, you know that's pointing to a bullish setup. So that's three things that come together. But if you do want to learn about these markets in more detail, unfortunately, I do not offer a premium Discord. All I offer is my one-on-one academy, but that is where I break down these markets in a lot more detail, the actual time cycles I am focusing on. So if you did want to apply for that or you are interested, you can go into the first link in the description down below. But with all that being said, I hope you did find this video insightful. Remember, I'm rooting for you and enjoy the rest of your day.